You ever look at your paycheck and think, wait, where did all my money go? Not in a crazy way, like buying something big and going broke. I mean, in a normal, everyday way, most people spend money. If that's you, yeah, you're in the right place. Because this video is exactly about that. Because what if I told you, it's not just inflation, it's not just your spending. There's a system quietly shaping how your money flows, and most people don't understand it well enough to even see it. In this video, we're breaking down how the tax system actually affects the middle class. Not just in theory, but in real life, through your paycheck, your refund, your cash flow, and your day-to-day stress. So, if you want to understand where your money is really going and how to take back control, you might want to subscribe. Because this is one of those things people figure out way too late. Because once you see how this works, you'll start looking at your paycheck, your refund, and even your raise completely differently. And more importantly, you'll understand why you can be doing everything right and still feel financially stuck. You ever look at your paycheck and think, wait, where did all my money go? Not in a dramatic way, not in a, I bought a jet ski and now I'm broke way. I mean, in the most normal, middle-class way possible. You got the raise, you tried to be responsible, you packed lunch more often, you cut back on random Amazon purchases, you even said no to the $7 coffee a few times. And somehow, your checking account still feels like it's in a constant low-grade emergency. Then tax season shows up, and people start saying stuff like, Maze, don't worry, you'll get it back in your refund. What? So first your paycheck gets shaved down before you even touch it. Then you're told to feel grateful when a piece of your own money comes back months later. And in between, rent is up, insurance is up, groceries are up, and everybody keeps acting like the real problem is that you bought takeout twice last week. If that sounds familiar, that's because for a lot of middle-class people, the tax system doesn't just affect how much money you owe in April. It affects how you think, how you budget, how you spend, and honestly, how trapped you feel all year long. Because look, here's the thing. Most people think the tax system is just a set of brackets. You make money, you pay some percentage, end of story. That is not how it feels in real life. In real life, the middle class gets hit in ways that are way more subtle than people realize. It's not just federal income tax, it's payroll tax, it's withholding, it's the weird psychological effect of getting a refund. It's the fact that your biggest financial decisions are being shaped by rules most people barely understand. And here's what most people don't realize. The middle class often feels overtaxed, not because they necessarily face the highest official rates, but because taxes are hitting them at the exact point where cash flow matters most. That's the game we're talking about today. So, let's break down exactly how the tax system affects the middle class, why it feels so heavy even when people say rates are reasonable, and what you can actually do about it. The first mistake people make is assuming, if I'm middle class, my main tax problem is income tax. No, not even close. For a huge number of middle-class households, the more immediate pain is payroll tax. And this is where people get tripped up, because payroll tax feels invisible. It comes out automatically. It doesn't get debated at family dinner. Nobody brags about optimizing it the way they brag about deductions. But it is real. Tax Policy Center has pointed out that middle-income households, especially those in roughly the $40,000 to $75,000 range, they often pay far more in payroll taxes than in federal income taxes. In one widely cited analysis, those households paid about 3 times as much in payroll tax as income tax. That is an eye-opener, because politically, culturally, psychologically, everyone talks about income tax brackets. But when you're an employee, payroll taxes are right there every single paycheck. Social Security and Medicare taxes hit gross wages, not what's left after all your life happened. Tax Foundation notes that, unlike income tax, payroll taxes apply broadly to wages and salaries, without deductions and credits softening the blow in the same way, which is one reason low and middle-income workers feel them so directly. So, let's do simple math. Say you make $80,000 a year as a W-2 employee. Before we even start arguing about deductions or credits, net you're paying 7.65% in employee payroll taxes. That's 6.2% for Social Security and 1.45% for Medicare. On $80,000, that's $6,120 a year. That's about $510 a month. That's real money. That's a car payment. That's a grocery budget. That's a solid emergency fund contribution. And here's the uncomfortable part. If you focus only on income tax, you miss the tax that's probably punching you in the face first. Now you might be thinking, okay, but high-income people pay higher tax rates, so why are middle-class people always complaining? Fair question. Because taxes are not experienced as a spreadsheet. They're experienced as cash flow. That's the part people miss. A household making around the U.S. median income is not living in abstract percentage land. The Census Bureau lists median household income in the U.S. at about $80,734 in 2024 dollars. That sounds decent on paper, until life starts taking its cut. Housing, food, insurance, transportation, utilities, childcare, medical bills, maybe student loans, maybe helping parents, maybe saving for your kids, maybe trying desperately to invest something for retirement. Meanwhile, the Bureau of Labor Statistics says average annual consumer expenditures in 2024 were $78,535, while average income before taxes was $104,207. Read that again. Average spending, $78,535. Average income before taxes, $104,207. And that is before you start emotionally spiraling about how much of that income actually makes it into your usable life. Here's the thing. Middle-class stress is not usually caused by one catastrophic tax bill. It's caused by the ongoing drip, drip, drip of money leaving before you can direct it. That's why it feels worse than commentators make it sound. Because if you're rich, taxes can be annoying. If you're middle class, taxes can interfere with breathing room. This is where it gets really interesting. A lot of middle-class people think their tax refund is proof the system is helping them. Sometimes that's true if refundable credits are involved, but a lot of the time, it's just your own money coming back to you because too much was withheld. Tax Foundation puts it bluntly. A tax refund is not extra money if it comes from over withholding. It's essentially an interest-free loan to the government. They also note that the U.S. Treasury estimates nearly 3/4 of taxpayers are over withheld. And look, I know some people hate hearing that, because getting a $3,000 refund feels amazing. The IRS showed a recent average refund of about $3,167 for the 2025 filing season. $3,000 feels like relief. It feels like progress. It feels like, finally, I can catch up. But psychologically, what's happening? You're using forced scarcity all year to create a future moment of relief. That's not wealth building. That's cash flow mismanagement with a patriotic wrapper. Let me show you what I mean. If your refund is $3,600, that means you overpaid by roughly $300 a month. $300 every month. That could have been going toward paying down 24% APR credit card debt, building an emergency fund, automating investments, keeping you from overdrafting, avoiding the mental stress of always being one surprise away from panic. And yes, I understand the objection. Dave, if I got that extra money each month, I'd probably just spend it. Okay, fair. That is a real concern. But now we're talking about psychology, not taxation. And that distinction matters. Look, humans are not spreadsheets. We say we want optimization. What we often actually want is structure. A big refund feels like discipline without discipline. You didn't have to build a budget. You didn't have to automate savings. You didn't have to think every week. You just survived the year, and then a lump sum appeared. That feels safe. It feels responsible. It feels like proof you're not completely failing. But here's what most people don't realize. When money is tight, predictability matters more than total dollars. And if you're constantly short during the year, then celebrating a big refund is a little like bragging that your landlord gave you back your security deposit after you spent 12 months sleeping on the floor. Yes, technically you got money, but the timing made your life harder. This is one reason the tax system messes with middle-class behavior. It encourages people to think annually while they actually live monthly. Bills are monthly. Stress is monthly. Groceries are weekly. Childcare is weekly. Gas is constant. But tax thinking turns all of that into one yearly movie. And when you live on a monthly reality with an annual mindset, you make worse decisions. Now, let's challenge another assumption early. A lot of middle-class people are terrified of making more money because they think a raise will push them into a higher tax bracket and somehow make them poorer. That is not how marginal tax brackets work. If part of your income moves into a higher bracket, only that part gets taxed at the higher rate, not your whole income. So let's use a realistic example. For 2026, the IRS says the standard deduction is $32,200 for married couples filing jointly and $16,100 for single filers. For married couples filing jointly, taxable income up to $24,800 falls into the 10% bracket, and income above, that goes into the 12% bracket until the next threshold. Let's say a married couple makes $90,000. Subtract the $32,200 standard deduction. That leaves $57,800 in taxable income. The first $24,800 gets taxed at 10%. That's $2,480. The remaining $33,000 gets taxed at 12%. That's $3,960. Total federal income tax, $6,440. Not 12% of the full $90,000. Not some magical punishment rate, just a layered system. But again, this is where it gets sneaky. Even if the math is not as bad as people fear, the emotional experience can still feel bad because withholding changes right away, and the raise often gets partially swallowed before you feel it. So, someone gets a raise from $90,000 to $96,000 and says, "Why does this barely feel different?" Well, because part of the raise goes to payroll tax, part goes to income tax. Maybe retirement contributions increase, maybe benefits cost more, and maybe lifestyle inflation quietly absorbs the rest. The tax system becomes the villain even when the real villain is the combination of taxes, inflation, and human behavior. This is the most important insight in the whole video. The tax system affects the middle class less through dramatic top-line tax rates and more through bad timing. All money gets taken before flexibility appears. That matters because the Federal Reserve found that only 63% of adults said they could cover a $400 emergency expense using cash or its equivalent. 13% said they could not cover it by any means, and only 55% said they had savings to cover 3 months of expenses. That is a huge deal, because when your margin is thin, every dollar removed from your paycheck increases the odds that a surprise turns into debt. And debt is where tax pain compounds. Imagine 2 households. Household A overwithholds by $300 a month and gets a $3,600 refund. Household B adjusts withholding more accurately and keeps that $300 monthly. Now, suppose both households get hit with a $1,000 car repair in March. Household A has no cushion, puts it on a credit card at 22% interest, and waits until next year's refund to clean it up. Household B uses cash flow or savings and avoids interest. Same annual tax burden, very different life. That's why the middle class feels squeezed. Not always because taxes are mathematically crushing in isolation, but because taxes interact with low liquidity. Low liquidity is expensive. Let me give you a story. Say there's a guy named Marcus. Marcus and his wife make a combined $88,000 a year. They're not reckless. They're not financially clueless. They're just busy. 2 kids, daycare, 1 car payment, rent that jumped again. Insurance that somehow went up, even though nothing happened. Typical middle-class life. Every year, Marcus gets excited about the refund. Last year, it was around $4,200, and he told himself the same thing a lot of people tell themselves. See, we're okay. We're getting money back. But what actually happened during the year? They carried a credit card balance for 8 months. They paid late fees twice. They had 1 overdraft. They delayed fixing the brakes because cash was tight. They turned down an opportunity to contribute more to the 401k. They stressed constantly. So I asked him, if I gave you an extra $350 a month instead of a $4,200 refund, would your life have been easier? He laughed immediately. Way easier. That's the middle-class tax story in one sentence. Way easier. Not richer in theory, not better on paper. Easier in real life. Now, to be clear, the tax code is trying to do a lot of things at once. Raise revenue, encourage certain behaviors, support families, fund retirement programs, fund healthcare programs, create political incentives. Distribute burdens in a way people will tolerate. So, of course it gets messy. But for the middle class, it often feels unfair for three reasons. First, complexity. If you need a translator to understand your own paycheck, that's a problem. Second, invisibility. The taxes that hurt the most are often the ones people don't actively decide on. Payroll withholding doesn't feel like a choice, so it creates resentment without awareness. Third, asymmetry. Wealthier households often have more flexibility, more control over timing, more access to tax planning, more ability to use deductions, assets, business structures, or investment strategies. The middle class mostly has wages, and wages are easy to tax. That's why this conversation matters. Because if most of your income comes from a paycheck, well, the system interacts with you differently than it interacts with someone whose income is more flexible. Okay, actionable part. Because I do not want this to be one of those videos where everybody nods along, gets angry, and changes absolutely nothing. Here are 5 things you can do immediately. 1. Check your withholding. If you always get a massive refund and you also feel cash-strapped most of the year, that is a red flag. Not always, but often. Use the IRS withholding estimator and see whether your paycheck is being overwithheld. If you need the forced savings feature of a refund, fine, but at least make that a conscious choice instead of an accidental one. 2. Separate tax strategy from behavior strategy. This is huge. If your real problem is, I spend whatever is in my checking account, then the answer is not necessarily keep overpaying taxes. The answer might be smaller automatic transfer to savings every payday, separate bills account, weekly spending cap, emergency fund automation. Don't use the tax system to solve a budgeting problem if a better system would do it more efficiently. 3. Run the paycheck math on every raise. When you get a raise, calculate what actually hits your bank account after payroll taxes, income taxes, retirement contributions, and benefit changes. Why? Because false expectations create lifestyle inflation. If you think a $6,000 raise means, I have $500 more every month, you're probably going to overspend based on fantasy math. 4. Prioritize liquidity before optimization. This one frustrates personal finance people because it sounds less sophisticated. But if you don't have even a basic emergency cushion, liquidity matters more than cleverness. Remember, the Fed's data shows a lot of Americans are still one modest emergency away from financial stress. So, before obsessing over tiny tax hacks, make sure you can survive Tuesday. 5. Learn the difference between tax burden and tax timing. This might be the most useful mental model in this whole script. Sometimes the issue is how much tax you pay. Sometimes the issue is when the money leaves your life. Those are not the same thing, and if you confuse them, you'll make bad decisions. Section 10. The bigger mindset shift. Here's what most people don't realize. The middle class doesn't just need more income. It needs more control over timing, more control over cash flow, more control over decisions, more clarity on where money is actually going. Because feeling poor and being poor are not always the same thing. A lot of middle-class households are in this weird in-between zone where they earn too much to feel broke on paper, but not enough to absorb inefficiency, and taxes magnify inefficiency. That's why this topic matters so much. Not because taxes are the only problem, not because every middle-class struggle is the government's fault, not because all taxes are bad, but because when your margin is thin, every hidden system matters more. And the tax system is one of the biggest hidden systems in your life. So if you take one thing from this video, let it be this. The tax system affects the middle class most powerfully through cash flow, confusion, and psychology. It's the paycheck that feels smaller than expected. It's the refund that feels like a win, but may actually be delayed relief. It's the raise that doesn't feel like a raise. It's the emergency expense that turns into debt because money left your life at the wrong time. Look, I'm not telling you you're going to outsmart the entire tax code overnight, but I am telling you that the moment you understand how this system actually hits your real life, you get your power back. You stop reacting. You start planning. You stop treating taxes like random weather. You start treating them like a system you can navigate. And that shift matters, because middle-class financial progress usually doesn't come from one giant breakthrough. It comes from removing friction, fixing timing, avoiding dumb leaks, making smarter monthly decisions, and refusing to stay confused about where your money is going. So, this week, do one thing. Check your withholding. Look at your last pay stub. Figure out what's actually being taken out. And ask yourself one brutally honest question. Is my tax setup helping my life, or just giving me a temporary emotional high once a year? If this video helped you think differently about money, hit subscribe, give the video a thumbs up, and let me know in the comments. Do you prefer getting a big tax refund, or would you rather keep more of your money every month? Because that answer says a lot more about your financial psychology than most people realize.